Vineet Matagar, Managing Director of Phillip Cap, joins us live. Vineet, good morning and thank you for joining us. Vineet, when we walked into trade, the big story was power, and all the brokerages made a case that the EPS estimates after the CERC order for Tata Power and Adani Power will go up by about 50 to 100%. So if the underlying thought is bullish, how come there is no price action or reaction whatsoever in Adani Power or Tata Power?
I think it is, so much about how the proposed regulatory change is going to pan out as far as CERC's own stand is concerned. That while the market is quite aware about the stocks that will be impacted on the positive, for example, on the negative, it could be the NTPC who could take it on the chin. But unless this whole thing is out, I think the price action will remain, that much more speculative in terms of the actual movement.
Vineet, in the run-up to the expiry, how do you think the bank nifty is going to pan out? And do you think PSUs in particular will continue to be a pressured lot?
It does not look as, as weak a pack as we have seen, in some recent times. So while I do not have a clear long signal that is coming out from any names on the PSU side, but at the same time, when we were looking at the data for the last week, it also is not pointing towards, an across-the-board bloodbath kind of a situation as far as the next bank nifty is concerned. In fact, there are some pockets of strength that is visible on the private sector, subsector as far as the banks are concerned. So I'm not looking too worried about whether the nifty is going to be really taken down to the cleaners because of bank nifty once again.
Vineet, the world is bearish on cyclicals and economy-related sectors and stocks, but the price action in capital goods stocks, especially L&T, seems to be telling me a different story.
I do not know about which part of the geography could be looking at the cyclicals in a negative manner, but my simple sense is that backed on the recovery relating to the economy, and perhaps back on the fact that post-election there could be certain announcements as far as the pending issues with respect to some of the infrastructure development projects is concerned should come through. As far as India is concerned, it may be prudent, or it may be tactically right to start building positions as far as the cyclicals are concerned. In fact, that seems to be the theme that I'm hearing for the last few weeks on the street, to start weighing a bit on the cyclicals.
So what would be your strategy for the Nifty in expiry week?
I think the simple strategy that comes to my mind is a rise in the volatility. If you notice, the implied vols for the current month and even for the ATMs for the next month are very low. It's hovering in the region of about 11-12%. In fact, the 30-day historical volatility, or the realized volatility, is about 13.5%. So the implies are trading below the historical. So a simple strategy will be to just buy a 6200 straddle, which is at the ATM, with a simple expectation that the volatility should rise by about 100 to 200 basis points.
Vineet, markets could go up, there could be down days, there could be sideways days. But do you think the trajectory for the Nifty, let's say till elections, which is middle of May, is headed higher?
In fact, while it is not looking weak enough to go and pierce through the 5950 levels or the 200-day moving average, which I believe is now at 5980. At the same time, there doesn't seem to be a runaway higher levels for Nifty beyond 6300. The market, and I will draw my argument from the same low volatility point that I made earlier. The market seems to be actually factoring in the fact that the movement for Nifty is actually going to be very very sideways. There is not going to be anything which is going to be significant. It is going to be range bound. Perhaps it's going to be just in the same 100-150 points of Nifty where it is right now, and therefore the low wall. So the market is actually not factoring in anything which is significant at all.
Right. So, Vineet, markets are nervous about the election outcome, but capital goods stocks are appreciating despite the election risk. So how come we are staring at two parallel markets if the basic concern is that election will be a game-changing event, at least for economy-related stocks, and economy-related stocks should also be under pressure?
I think there is a lot of data that is available in the public domain on the back of the exit polls, on the back of some of the surveys that have been carried out, which are clearly indicating that there is going to be a pressure on the incumbent government, which also is pointing towards the fact that NDA through its coalition is actually going to look at numbers which are of course not in majority yet, as one of the recent surveys showed, but it is showing that that BJP is going to march ahead with some stellar numbers, perhaps historic numbers as far as the Lok Sabha elections is concerned. On the back of that particular likely change post-election, there is a sentiment that there is going to be a change as far as policy making is concerned. Some of the items which have been in the cold storage because of the way the government has acted over the last few months as a run-up to the elections will also come out in the open, and therefore position taking in the cyclicals or a pickup in the economy is concerned. So I don't think actually that they are the two opposite sides of the spectrum at all. They seem to be pointing towards a very likely outcome, both for the elections and also for the markets.
So Vineet, in the near term, what's the range that you're calling on the Nifty spot? 6,000 to 6,150?
6,200 actually seems to be the call strike where there is maximum open interest at this point in time. So I'm actually looking at 5,950 to about 6,250.
Vineet, for someone who is fully invested in this market yet wants to protect his portfolio from the election volatility, on the day results are out, markets could be up 10%, they could be down 15%. How should a long-only investor or a long-only fund, protect his portfolio or her portfolio from the election volatility?
Okay, so the description that you have given is of a long only, and therefore event-related jerky movements, knee-jerk reactions are something that the long only portfolio guys are quite good at. Shall I say, not getting bothered about rather than ignoring. But one way to hedge a long portfolio is obviously the Nifty put options. The FIIs, for example, have been looking at building the Nifty put portfolio, which is now in the region of about $2.5 billion. So, that's one way to look at it. The other way to look at it is that is the election outcome going to result in a permanent change in the way the markets or the economy will behave, or it is really that 1 day, 2 day, or at best or at worst, a weekly phenomenon against which one need to just brace oneself and look at the 2 year out kind of a position, because after all you are a long only guy.
Vineet, what's your sense about the dog of a sector like cement making move on Friday, and a very strong one at that? Does it seem like this could be a sustainable trend?
It is, because some of the early signals from some of the smaller south-based cement companies also started trickling in, as our analysts were interacting with those companies about a week, 10 days ago, and Friday saw a good amount of strength in names like Ultra Cement, Grasim, ACC, Gujarat Ambuja you were mentioning. So it does look like a pack which is looking all set. But then, as Nikunj was saying earlier, where there seems to be position taking in some of these names ahead of and perhaps in anticipation of what is going to come post-June.
Vineet, so what is your current model portfolio like? I just want to understand the sectoral allocation.
So we have started increasing the weightage as far as the cyclicals are concerned. I do not have the exact model portfolio in front of me, but what we have done tactically about a month ago is to reduce the weightage on some of the defensives such as the IT and FMCG, and start increasing the weightage on the cyclicals. So we were talking quite aggressively about some of the names like L&T, Voltas, Cummins India. So these were the names that we were talking about, quite openly with our clients and with with our institutional as well as non-institutional clients. So that's the change that we prescribed about a month ago, and that's the strategy as far as the overall view is concerned in terms of the change in the allocations.
Vineet, the entire OMC pack has moved quite smartly today. HP, IOC, BP, all these names. Anything that's looking good for the trade according to you?
No, I haven't seen the OMC pack. Although I think the only thing that I can share is that based on the rollover that we were seeing on Friday, oil and gas, including the OMCs, were actually showing much lower than the average rollover. So perhaps today, this morning, something seems to have picked up as you are indicating, but I haven't seen it.
Vineet, the street is divided on how to approach autos. We've got a bullish commentary from Maruti, but a bearish one from Ashok Leyland. Tata Motors, the China fear has got subsided, and for Mahindra and Mahindra, there is the upside from the tractor business, but the downside from the SUV business. The outlook for auto, I guess, is split right in the middle.
No, what our analyst has been talking about as far as the auto is concerned, or shall I say auto plus auto ancillaries, is actually to be selectively long on this particular pack. Tata Motors, Maruti, Bharat Forge, no, sorry, not Bharat Forge. Some of the other auto component companies are the ones that that we have been talking about on the long side, for some time. So we actually think that it is going to be a pack that will move again in line with what we were discussing earlier.
Happy to buy L&T, Voltas, ABB, irrespective of the election outcome. Are these your classic stocks which you are recommending investors they should buy for the long haul?
Yes, absolutely, absolutely.
You
throw in the name of Siemens, and even to some extent a bit of Thermax, and those are the names that we are definitely looking at and talking about.
Thermax and Siemens, if I look at the management commentary is